said that, you have to thrive in a bull, bear and sideways market. And our answer to that is you can only thrive and survive if you sort of change constantly. Not only change, you'll have to sort of evolve because there's you and there is the environment. And this is saying that if your environment is moving faster than you already stand disrupted. You have to at least be in line with the environment, if not ahead of it. If you are ahead of the environment, then you disrupt the environment. So let's look at the environment and reflect on how it is positioned now and how possibly it can change in the next 5-10 years for sure. Now, when I put up my slides, I don't want to go in the reason as an industry today, and we are just getting warmed up when we look at how we are positioned today, because when you look at us as a country, we are a large country, 142 crore people, 136 Aadhaar cards already issued. We are the only country biometrically identified across the world. Adult population of 93 crores, bank account holders of 82 crores, PAN card holders of 60. Anybody who's eligible to mutual fund investors here. Out of all this, we just have 3.5 crore unique mutual fund folios. And let me split that part of 3.5 crores folios. Till COVID, that is almost 25% of 25 years of the industry, we had 2.3 crore folios, or nearly 2.5 crore folios. 1 year post-COVID, we added 1 crore. That's the underlying change which I want you to keep in mind as we unfold into the story. Let me just give you two cliched slides of our industry, and I'm just saying this for the sake of reputation, because these two slides need to be internalized completely if we have to unfold in our journey from 15% AUM to GDP to possibly double that. Let's start with doubling that, and then we'll talk about possibly 75, 80 at some point of time. The question we ask everybody is, what is on your mind? 65,000 Sensex, or this story progressing to the third largest economy in the world? Because whether you like it or not, this is going to the third largest economy of the world. What is also happening post that is very simple. Another cliched slide of the industry. And just to remind you that this is the only country which is giving you this great advantage of doubling its economy in the next 8 to 10 years. That's where we stand today. And of course, I'm hinting to somebody else, I'll come to that. But when you look at the India growth in the next possible 1 or 2 years, it's probably the first time in my presenting career of 20-25 years that I'm seeing an India growth beginning to impact global growth. So we are no longer an insignificant country. I think Mr. Anand Narayan sort of talked about how global investors are warmed up to India. You have no idea how our Koreans are warmed up to India. There's so much of enthusiasm outside India about India, and at times I feel that maybe we are not as buoyant as others are. But this is the story of India. And when you look at the underlying of India, it is no longer just a service-related, one-sided story. It is beginning to look like a broad-based story. I mean, Vetri is here, he will agree with me when I say this, that when you look at data points across, and then there's some data points which I put up, but add to that roads being built, airports being built, medical insurance across the country growing, any data point that you take up, month on month or quarter on quarter, we are only seeing addition. Maybe 2 years ago, with the COVID at the backdrop, we could have said that the base was low, but the base is no longer low, but the data points seem to be sort of piling up by the month. Now, we've also absorbed a lot of shocks as we speak. Not a single car is packed at home with 100 rupees of petrol going out of our pocket. We have absorbed the inflation as we speak. We talk about tomato prices and all, but nobody is not buying tomatoes. Life goes on, and we sort of imbibe that in our lives and then go forward, and that is what is happening at the underlying. And then make no mistake on that this is only going to go further from here. It's not going to stop. Why I'm saying this is when I look at the underlying mutual fund data, the mutual fund data does not seem to be believing it. I mean, at a time when all of us know that this is going to go from 3 trillion to 6 trillion, we are redeeming money like there's no tomorrow. Think of the data. That's why I say that we need to internalize this data completely to actually realize the story of India. And that's what needs to be done if we have to progress further. What it will all do is it will just make us richer, and that's what is happening to India. Slowly but surely, mutual funds are beginning to get some money from people and reflect on the story that's 1 trillion to 2 trillion to 3 trillion to 6 trillion. If we break that up into pockets of 10 trillion money coming into India, our mutual funds, the number of years it's taking is only shortening. The last 10 trillion came in just 2 years. Take this forward to the SIP data. Against a backdrop of 2.3 crore folios, or almost 3 crore folios now, SIPs have 6 crores SIP. That means number of investors investing in number of multiple mutual funds is far higher. And let's look at the SIP investor. That person is standing put. The same person is behaving differently when it comes to investing in a lump sum manner, where there is blatant return chasing and there is blatant market timing. And I'm talking about the equity side. While on the SIP side, the person continues to participate month on month. While, correct me if I'm wrong, the person will say, oh, your fund has not performed well, I'm redeeming. The same person would be carrying on their SIP in that particular fund. Reflect on it some point of time. And that is what is changing. It is the first product from our side which has got commoditized, and that's why probably it's growing by the month. Right? People say, sip karo mast raho. Nobody says ki SIP ka return itna hai. How many of you actually know what your SIP is yielding? Think about it. The sooner a product gets commoditized, that is when it starts expanding. And that's why probably we are seeing this explosion month on month on this account. But here's the story of India. India still remains a very conservative investor. 50% of our money is in gold. Post-demon, almost 15% of our money is in cash at home. And mutual funds get 4.7% of your money. Post-demon, there is 3 times the amount of cash in your houses than we are getting in mutual funds. Out of 10 rupees that is going into bank FDs, 1 rupee comes to SIP. That's the underlying. Yeah. When you look at the country, and this is our country which was at 2005, it was a low and middle income country. When I went to make my suit, and I can't forget this example, and I was telling Master Ji ki yes, thoda pet bada hai, aap uska thoda dhyan rakhna. He said, ye aapka problem nahi hai, pura country ka problem hai. And we Master Jis know how to, tailor a suit, but that's the India story. Pet thoda badta hai. And when pet badta hai, the lower and the upper middle class start growing. That is where we are. Look at the money flow in between 2005 and 2018. We are getting a serious low and middle level consumer then. And what will happen to the 2030 sort of forecast is slowly but surely, the upper middle class and the higher class will start to become a real story in India. India will start amassing wealth, and that wealth needs to be deployed. And when you look at the distribution landscape of the country, it can be divided into 3 lines. When you look at the lower and middle level part of the industry, that's where probably the digital players come in. I'm just making a sort of projection. I can be wrong. The upper and middle class is open to all levels of distribution, and slowly but surely the higher level will move into private banking. But when you look at the data points that are unfolding, the simple point I'm making is there is space for everybody and more. That is why we feel there is a long, long way to go when you look at the Indian financial investing perspective. But finally, what will make a product explode? What will make a product acceptable? It is the experience of the product. Why do you think there are more SIP investors coming in than, say, the lump sum investors? Because the SIP investor is actually participating. That's his or her main outlook. And when you look at participating over a period of time, whether you look at buying a house, you don't have to convince somebody to buy a house. You don't have to convince somebody to buy gold. And actually, if you look at India, on Akshaya Tritiya, when we buy gold, it's the most expensive price. But the experience has been so good over a period of time that they want to participate more than knowing what is else. So when you look at this story unfolding in the next 5-10 years, we feel, and when I say this, I'm saying this more from a number of investors' perspective rather than, say, the AUM perspective, the first level of investors will come in to own the benchmark. When you look at 15% GDP versus 75-80% GDP, bulk of the investors lie at the bottom of the pyramid, and that is market participation. Reflect on this when the behavior of SIP is involved, and going forward, we are already seeing market participation happening at a benchmark level. From there, the person will graduate into rule-based and expertise. And we are seeing what has happened in the last 5-7 years when it comes to categories like BAF. We had a long discussion on multi-assets. So these are asset classes or categories which will start getting more and more money. And then, after all this, they will move to the human expertise, which is pure active management. Again, this is not a reflection of the amount of money that we'll manage. When you look at the wealth, probably the amount of money managed will be at the highest end. But the number of investors probably to start with will be more at the bottom, and that is beginning to happen in the industry already. Short period of time between 2019 to 2023, what used to be just 2.8% of industry folios in the form of passives, today is around 14% of the industry already. And passive is still not a story in India. India still remains a very active story. There are enough managers which will come and give you benchmark beating returns, is a fact. But the thing is about participation. The thing is about experiencing the asset class. Hence, what will happen at that blue level, it will just start growing from here on. And it's great that they come in and participate, and once they start participating, we can then push them up through that experience into other modes of investing. But that blue line is only going to expand, and that is how globally AUM to GDP starts growing. Let me tell you, Mirae Asset, we work in 17 countries. India is the only country which is selling active. That's the global landscape, right? The active is making a comeback in the passive industry in the form of active ETFs. It's making a very decent comeback, but again, at a participative level. It will expand those investors there. That is how this will start growing, and make no mistake on that. But here's the good and bad part. When you look at India, and you look at India from the data point of 60% of world population under 30 being in this country. Very slowly but surely, the demography of investors is already happening. 25 years, 2.3 crore investors. 1 year, 1 crore investors. Next year, 70 lakh investors. So in the next 3 years, we will put more investors in mutual funds than it did in the first 25 years. And when you look at this new set of investors coming, they're either the millennials or the Gen Z. You know who the millennials are and who the Gen Zs are. I don't need to sort of explain to them. But when you look at their behavior, they are not behaving very differently. When 100 people were asked by YouGov, 57 said that they will still put their money in savings account. 54 of Gen Z said they are in savings account. Incidentally, the millennials are more tuned to mutual fund than the Gen Z. The Gen Z is actually more towards gold and precious metals and cryptos. So we as mutual funds have to work really hard to convince the Gen Z to come our way. When you look at the millennials, 50% of people who were born later are actually warming up to mutual funds, not the ones which were born earlier. So from a communication perspective, from convincing the young, we still have a long way to go in telling them that this is a good product and they need to participate. That's the story. So the work for us is actually very, very hard. So what do we need to do? I'm almost up for time, so I'll just finish up quickly, is that, finally, this is a business of trust. And they will come to us if they trust us. That's the truth. They trust the asset class they invest in. They trust gold, they trust banks, they trust their houses, so they are there. First, we have to build a business of trust. Please understand, this is a fiduciary business. And I hope Mr. Anantanaran was there, and I would like to tell everybody there are just two people in this room. The lawmaker, which he was, he is, and the law follower, which we are. There is no third person in this business. It is somebody else's money that we manage. More often than not, I hear, kuch rasta nikalo na. There is no rasta. Till the time there is some jugaad, there is some rasta, that trust will not happen. We have to clean up our act and come across as a clean safeguard of the other person's money. Only then will we regain absolute trust. And that has to happen over a significant period of time. This is very fortunate to be in a fiduciary role. Not many of us get to manage somebody else's money. If I ask you in this table, on this room, what is more important, your health or your wealth? You'll put up your hand and say, yes, health is important. In your mind, it will be wealth. Trust me on that one. Yeah, but we are very so fortunate to be on that side of the story, so we have to uphold that. There is only one rule in this business, and that is what is right for the investor is right for us. There is nothing else. And then, while the globe has moved on and started investing in other parts, I think India still is a market cap investor. Our portfolio is finished with large cap, mid cap, small cap. I'd just like to leave you with one small example, is that if you look at a flexi cap or the category of flexi cap, the 10-year return is 15.74. If you look at consumption, I could have gone on, but let me just give you one example. The consumption category has given 15.76. And as a homework, I'd like all of you to go and see the standard deviation of the consumption fund category. It has given superior risk-reward return over a 10-year. But when we look at thematic investing, it is immediately confused as sector investing. The world does not invest in market cap. World has moved on into thematic and new ideas. And with passives, let me tell you, that's just going to happen, because what's happened on the active side is categorization has killed ideation, whether one likes it or not. On the passive side, wherever there is an investable universe, you can create an index, and through factors of that index, one can give you multiple stories. And that will be a big attraction going forward, not taking away anything from the active fund management space. But if we have to go ahead and beat the disruption, our minds have to open up to new ideas of investing, because the young are very different. They are open to new ideas. I think Varun is here, and Varun and I shared a very interesting story on Fang Plus. We were surprised to see the number of young wanting to own Fang Plus. And today on a daily basis, our Fang Plus organically does around 4 to 5 crore organic volumes without any advertising. We can't advertise because we just have 100 crores to take. Right? But it organically appeals to the young, and it just goes on trading on it. We're not advertising at all. Because the moment we advertise, the fund will stop because it reaches its limits. The young are wanting something else, and we have to give that something else is a reality. So how are we preparing? I just wanted to take our example to give of what we look at it. We've evolved over this period from being a classic, long-only active manager to having different businesses catering to different investor classes. We now have the broking business, we have the index business, we have the financial services giving loan against mutual fund, we have now the passive side of the business, across spectrum, trying to give a product to anybody who matches. Please understand, we are a product manufacturer. We are agnostic of your choice. The investor chooses what he or she wants. I should not be biased in any way. I should be standing here unbiased in front of you, giving you a good product which you can catch across the length and breadth. That's what we want to do, and I just wanted to replicate ourselves as a solution, is that we want to be a well-diversified fund house, trying to give every product that we can, which we can manage. Widespread product basket from the liquid fund to a risky Fang Plus. I shouldn't be judging what you want. You should judge what you want and cater to what is good for your portfolio. It's a business of people, whether on our side or partners. Build good partnerships and build a good ecosystem to give a good solution. Lastly, good innovative ideas to catch the fancy of people. My biggest worry is my son is 24 years old. He stands up and says, "Dad, you don't have a single product for me." That's my biggest worry, because that's the age of the future. And who am I to judge? They are economically better, knowledge-wise better than me, and they will judge, trust me. If we don't give new ideas, they will shift somewhere else. But at the end, thank you so much for 15 years with us. We've spent 15 years in this country. This is a big moment for us. We stand in front of you as the only organic global asset manager here, and 15 years in India as a global asset manager has not been an easy journey. So thank you so much for your patience listening, and thank you so much for your time, and more important, trusting us for 15 years. We're trying to build a business of trust. We just got started, build a platform. We have a long way to go. Like the industry, we would like to participate in the industry along with investors. So thank you so much for listening to me.